is New York even, is it even allowed in New York? Are we allowed to say this?
No.
I actually don't even know.
Yeah, we are.
Point.
Yeah.
I'm time for that stuff.
It is legal in New York.
Is it?
Yeah.
Okay. If you say so.
Yeah, we're good to go.
I don't know what's.
I'll play Lotto
I don't know
sometimes.
what's
Dollar
what.
I've done FanDuel. Yeah.
Lotto? I mean, I'll bet on that.
Lotto?
Yeah, I'll do Lotto.
Well, I mean, I don't. That's a whole other.
Whole other thing?
Got a couple scratch offs.
All right, we got Wells Fargo ringing the opening bell here this morning on this Friday as we have this pall being cast over the market by this perception now that we're going to get maybe another 3 interest rate hikes this year. All 3 major averages are down to end the week. It's been a down week already.
What does it mean for your money? I loved how we broke that down earlier in the show, Julie. It probably means maybe you don't go buy a extra pair of pants this spring season because your credit card bill is probably going higher. But again, that's a little bit forward thinking.
Yeah, maybe that's. I think of it more as maybe you're not going to buy the house that you.
Or the car. I mean, some of these payments are they're going through the roof.
Yes, they are.
I thought we were going half season on a house.
Yeah, that's right. Yeah. I have my eye on a property in Pacific Palisades for you, Brian Stassi. We were looking at it earlier.
No, that Austin Russell, sorry, Brad. Austin Russell, Julie flagged me to this mansion that Austin Russell, Luminar CEO, has been on our program many times. $83 million mansion. What, he bought it in 2021?
TMZ reported on it.
Wow, just $83 million. I mean, the house is beautiful, but Brad, we can't.
It better be $83 million.
We got to write more stories if we ever want to afford that.
We could split $83 million. It's not going to be an even split, but
yeah, okay. Yeah, right. 80% on you.
As long as you're good with 99 to 1%.
Yeah, right. Okay.
Well, let's take a look at the major averages here out of the gate this morning. Dow Jones Industrial Average right now, it is sucking some wind, lower by about 0.5% at this point in time, and over the past 4 days, it's down this week by about 2%. We'll keep a close eye on that one, as we will the NASDAQ Composite. That's lower out of the gate by about 0.7% right now, and 1% in declines over the past 4 days over the course of this week. And the S&P 500, it's not any better there. Down this week and also down here this morning by about 0.5%, 0.6%. We'll round that off too. Let's take a look at some of the sector activity out of the gate as well, as we're tracking the 11 S&P 500 sectors. And here on the day, well, that's a year-to-date view. Let's put that on intraday. There we do it. And intraday, we've got XLU, utilities. That is doing well. It's flat, barely to the upside. It's in the green, though. Hey, we'll take some wins where we can get them.
Hey, Brad Smith, can you do me a favor for me? I'm sorry to interrupt your flow, but I was thinking about these sectors while we were talking to Jim Bianco a few moments ago, right? Can you do me a favor and hit up a year-to-date for the sectors in the S&P 500? Because his argument was that a lot of the tech high flyers, as perceptions change about the Fed, are going to come down, and groups like energy and consumer staples are going to go up. Now, on the year, energy is right in the middle there. It's down 1.7%. Consumer staples down 2.4%. Now do the past 5 days as we have seen these perceptions start to change, right?
With the no landing scenario.
Yeah, and energy is still the worst performer, but maybe that's going to change, to Jim's point. I don't know. Consumer staples have crept back up. They're up, well, they're still down 0.3%. But anyway, I'm just curious when this flip is going to happen that he was talking about.
Yeah, and it would be interesting to track technology within all of that too, because if there is more of a reemergence of a stock pickers market, you have to wonder where the last bull rally has changed the thesis for a lot of investors out there in where they might have more propensity to do that picking versus some of the kind of moat or old school Warren Buffett portfolio plays back in the day.
Yeah, we'll see. I don't know. It's interesting. It's good food for thought.